Started recording.
Okay, thank you, Noran. So, a couple of announcements that I want to make this morning. Number one is, are are you guys familiar with the Project Management Institute? Anybody familiar with the Project
Yes.
Management Institute?
Yes.
Okay. So years ago, I became a PMP, and I do recommend that if you are taking your project management course, the PMP is a very transferable, or excuse me, project management is very transferable to any industry that you go into. And it's kind of like a common language. So even if you don't speak, the language, the methodology is a common language that all project managers understand. For example, they understand about scope and budget and schedule. So I do recommend. Oh, awesome, Samia. Awesome, awesome. So I do recommend that you. I don't know if the project management course is it required or is it an elective? Is it a required course or is it elective?
It's elective, but I think we didn't choose that.
Okay. Um, so if you do choose it, and you want to, if you're interested in project management, which is very, very challenging, but very, very fruitful. Every organization that I've been involved in, they have project management, they have project managers. Neuron said it was required. Okay, that's good. That's even better. Um, they have project management. In my consulting that I'm doing, you should have started, but you shifted. Gotcha. Um, we have project managers on both sides, um, on our side and the client side, and that's the project management is what helps to drive the project. So I do recommend the class is required. If you're more interested in being PMP certified, it's an internationally recognized certification. So no matter where you go in the world, uh, PMP is recognized. I'm saying all that to say this. So I got my PMP years ago, and I used to do boot camps through my company, PMP boot camps to prep people to take the exam and so forth. And I have the opportunity on Wednesday to speak to the PMI members in a webinar. And you have to be a member of PMI, I believe, to attend. And I'll be speaking on three topics in one, and I posted it in the WhatsApp chat. It's transformational leadership, organizational change management, and project management, the trifactor of project success. Because in my experience, you need the air cover with the leadership for the project. You also need change management because people are shifting from one way of doing things to another. So you need to manage the people side of the project. That's what change management is. It's the people side. The project management is involved in the processes and the tasks, right? But the OCM, organizational change management, is involved in the people side and how to manage that because the project is not really successful unless people have adapted. Let's say software, right? If they don't adapt to using the software, then it's not really successful because they can also sabotage it. So I'm speaking for an hour on that topic. It is free to PMI members, so it's I should know this. It's Wednesday the 1st.
Is it free for us also as a student?
No, it's for PMI members.
Oh,
Yeah, you've got to be a member of your local PMI. So I wasn't sure if you guys had that membership. And PMP certified is not the same as being a member of PMI because there's a chapter for every location and you have to be that. So what I can do is see if I can get the video because they're recording it so that I can make it available to you afterwards. Not sure, not making any promises, but we'll do that. So it's Wednesday at 2 p.m. EST. So that is that is based on the book that I wrote on leadership and organizational change management and what that looks like. Julian, you have a question?
Yeah, that's awesome. If you can get some record.
Yes, I'll see if I can do it. And I'll mention that it's for a school to see if they'll do it because they, I had to sign all these contracts to not use the content and so forth. So I'll ask my assistant to see if we can get the recording to just maybe share or what have you. Or maybe I can log in. It's an hour long though. Maybe I can log in and then you can see it on the screen. But I'm excited about that because very passionate about transformational leadership, as you know. I am an OCM practitioner and just wanted to share that with you. The other thing I wanted to share is that I will be offering a class here, the same title, Transformation Leadership, Organizational Change Management, Project Management, all together. So if that's a class you're interested in, I told the president I would check today. Let me know or raise your hand. It'll be a class, it'll be a leadership class, but it'll be more integrated with change management and with project management. So it's more strategic than it is operational. So I think the leadership class that's at the school now is more operational. This is more strategic. So I'm going to offer the class as a course and then also as a certification. So if you wanted to do a certification in that, it'll be a shorter time and then you'll get a certification that you can, of course, it'll be international because transformational leadership, organizational change management, project management, international, it adds a lot to your toolkit. So let me know if that's something you're interested in. Um, the other thing I wanted to talk about was I spoke with Amir, I think that's how you say his name, the president, about possibly speaking to our CEO about offering internships to students. And the internships, I haven't talked to the CEO yet because I need some more data. So the company I'm consulting with is a software company. As I said, we build software for universities. So not on the not this side of the university, but the other side where you actually take care of the registration and the grades and the billing and all that stuff. So that's what we're involved with. So it's a very software driven type of company. And I know that some of you do have the technical skills. So one of the things that I spoke with Amir about is that I think it's important to, if you are getting a global education, that you get some type of experience. And looking at this company to see if they're interested in offering internships um, to the students that are interested. So let me know about that as well. Um, I've spoken to some of you personally, and on here, you guys are very smart. So let me know about that. Let me know about that and about the interest in the course. Um, and then the last thing is, you may have noticed some of you, and I want to say this, and I noticed that post from Professor Anne Marie last week, is that most of you are really, really great leaders. You have an assignments to do. You have prioritized it and you've done it. And you've taken the feedback and you've incorporated it. So that is most of you. Some of you, and maybe not you on the call, but those that are listening, I'm not sure if you're even in the class because I haven't seen you. But what I'm doing going forward is that I'm going to, if you do your writing assignment like you have been doing, you will get 100% credit for it. So I've given you feedback on grammar and APA and things like that. I want you to take that feedback going forward and continue to write, but I'm going to just award the grade, the full grade for having completed the assignment. So you will see that going forward. And that is definitely appreciate those of you that are taking the writing assignment seriously. You're incorporating your feedback into it because you want to get better and you want to transform. And as I said, transformation is not comfortable. It is you're welcome, Miran. It's something that if you want to go from this space to this space, it involves you being uncomfortable and being challenged. So most of you have really risen to the challenge. So keep up the good work. Um, and that's what great leaders do. They rise to the challenge. They're learning leaders. That means that they want to learn. They want to be better. And the phrase that I heard throughout my doctoral program is knowledge is provisional. Knowledge is provisional. So based on what you know already, you don't get married to that, because there'll be new knowledge that challenges that knowledge that's designed to take you to a better future state. So kudos to you guys for continuing to work on your writing, improving your writing. Um, and it is important, especially if you're involved in working for, I'll speak about this country because I know more about it, an American country. Your communications are very, very important. So continue to do that. So before I start this week's lecture, any questions or comments? You're welcome, Samuel. Any questions or comments about last week's lecture or about the class in general? Anybody have any questions or comments? Questions, comments? Alrighty. Okay. Let's continue. Last week we talked about financing the business, how to finance the business. And many times when you start a new business, you are looking for financing from investors. Judlyn, you have a question or comment?
Oh, yeah. One of our classmates is asking the link for our class study.
For what?
Asking. One of our classmates is asking, so I accidentally pressed the mic on.
Oh,
So
I see. Okay, sorry. All right, I'm looking in the chat to see if there are any questions. I don't see any questions. Okay. So we talked about financing the entrepreneurship venture, and it's usually you're looking for investors, and they look like banks with loans, private investors, venture capitalists, angel investors, GoFundMe. We'll talk more about that today. So you're looking at how you're going to finance the the venture because you have expenses. You have a great idea. You thought it through. You've got the right team, and I'm speaking now specifically to your team project. You got the right team. You have the right team that's going to be doing different things in the organization. And let's take a look at now what your finances will look like. So this week we're going to talk about accounting, more fun stuff. And I know I asked last week, some of you have taken an accounting course before? Yes, raise your hand if you have. Any kind of accounting Sammy has? Okay. And Winnie, okay. Since a lot of this will be um, familiar to you, I wanted to point out that we are at week 7. We're halfway through. Yay! So we're halfway through. We're getting better and better. And I'm going to pull up the slide deck. It's taking this time to load. And we're moving through this entrepreneurship class and building each piece of the business plan, because part of your plan includes, well, how are you going to finance this business? And I know the question was asked last week about Shark Tank being, a lot of people on Shark Tank are there because they've done some sales. They want to go to the next level in terms of the business, and they're looking for additional funding so that they can expand and grow. And it's the same principle. Um, the difference is that they've already started. They've shown some promise in that they've had sales of their products and services. So they've identified their market. They know who it is. That market is buying things from them. But in terms of them soliciting funding from investors, it's the same. You've got to make a case. This is why you should invest in this company. And the case is made with the business plan. So let me share my screen. And I want to keep the chat open so I can actually see if you have any questions. Okay. Oh, that's the wrong deck. No one noticed, right? Chapter 7. I had it open, but I didn't open the right PowerPoint. There we go. We're not going backwards, we're going forward. So this week, we're going to take a look at financing and accounting. Okay. So we're going to look at some key financial issues involved with starting a business and discuss the basics of funding the business and explain the importance of proper accounting. So this is accounting. It's like keeping the books, not cooking the books. This is important. So last week we went high level. This week we're going to get into the detail. Okay. So questions that we'll ask: how will you fund the new business, and what funding level is needed? What records should be kept, and how will you manage the information flow or data flow? How are you going to manage that? Because information and data is the basis of decision making in the company. So the key financial issues involved with starting a business is funding and funding level. Okay, so funding is one thing, but what level of funding do you need? And you might need different levels as you move through. For example, when I shared the cash flow statement at the beginning of this course, the expenses were different as you move through the months. So you might need a big cash flow, excuse me, a big investment in the beginning because you're starting up and you're buying a building or you're buying equipment and so forth. But then that might decrease as you move through the initial stages of the business. So the funding level can be different in different periods. You want to establish an accounting system. An accounting system is simply a balance. You balance in your income and your assets and your liabilities and your cash going out and coming in. So it's kind of like a numerical picture, if you will, of the health of your business. And you need to pay attention to the flow of information, how the information is coming in. Information such as the level of inventory, if you will. Information such as, the owners who are investing in and what type of investment is it, what share of the company they'll own and so forth. So let's take a look at the basics of funding a business. Normally, when you have an entrepreneurship establishment, it starts with the founder, with his or her personal resources. How many of you in the past, with a show of hands, have started an entrepreneurship business? You started a business, which you may or may not have today. How many of you have started a business from scratch? Anyone?
Me, I started it.
Judlin? Okay. And Winnie has as well. What type of business was it? No, and you're still thinking of your business. Okay.
My business is in the Philippines.
Mm-hmm.
It's a
Okay.
mining. It's a private mining company.
Okay. I think I know about that. Hello. So you usually when you start the business, it starts with your personal resources. And resources does not only include money. It could include, you have I'm going to use my personal computer to start the business. So usually it starts with the founder and their personal resources. And when you started a baking business, excellent. But you may need other sources of funds. So you may have small sources like crowdfunding where people give different amount, or it could be, you know, one company or one individual investing with interest in ownership. So on Shark Tank, the sharks will say, so we'll give you $200,000 for 10% interest or 20% interest in your business. Okay. So equity investment, crowdfunding, two different types of funding. Equity is where you invest in the business, and in return, you get a percentage ownership. And that's what they do on Shark Tank. Again, they'll say 200,000 and in exchange for 25% of your business or what have you. And then crowdfunding is you have a large number of very small investors. So whereas on Shark Tank, a shark might give you $220,000. Crowdfunding, you might have $1,000 from 220 people. Yes, question, comment. Okay. So crowdfunding, you might have seen GoFundMe and things like that. It's another way of people investing, but you have a percentage of the business. Okay. Okay. So non-equity means that there's no investment, there's no ownership in the business. So equity is where I invest or someone invests in the business in exchange for ownership in the business. Non-equity is banks, credit cards, asset leasing companies. These are the ones that lease you if you need a truck or equipment. They will lease you that equipment, and then from individuals or suppliers with no stake of ownership in the business. And you can get also business grants. I talked about the Small Business Association earlier in the class, and frequently in the United States, the Small Business Association is a government source to help small businesses start and grow. And part of it is that they might offer you grants you don't have to pay back. And grants are also from private individuals, from schools, from a lot of different sources, from companies. They give grants to small businesses. Maybe sometimes it's to women-owned businesses or minority or businesses that further the arts and so forth. And then they also have business plan competitions where you might win some money. So these are sources for non-equity. So debt is any term that's tied to non-equity. So debt would be loans from the bank, credit cards, or supplier credit. And usually there's an interest attached to that debt. Loans are contractual agreements, right? So if you take a loan from the bank, it's a contract. They'll say you have a loan for $100,000 payable in 5 years at this amount per month, and this is the interest rate. So the interest is the cost of the money, right? So they might provide asset-based lending, which they give to you or loan to you for the purpose of a necessary, for the purchase or the purpose of a necessary asset. So with Judlin, if you're doing mining, their equipment that you need, and then you might secure a loan for that. Of course, family and friends are always a source for your business. And the founders now, which are the people that start the business, they may decide to loan money to the business. So I think that's a great strategy. in that you're not just putting your own money in the business, but you're loaning it to the business and you're hoping to get it back at a certain point in time. So you don't just want to throw your money into the business, no matter how large or how small it is. You want to make it a loan because it's business, right? All right. Credit cards. I don't know about you guys, but in this country, even dogs have credit cards. So it's revolving credit. It's not tied to any asset. And revolving means that you spend a certain amount, you pay it off to bring it back to what the total is. So if your credit limit is $10,000, if you spend $9,000, you keep paying it till you get back to the $10,000. There's no set repayment schedule. However, if you don't pay back in a certain time, you will be charged very high interest. There's an upper limit. So as I said, is the credit card, the credit limit is maybe $20,000 or $10,000. The interest rate is much higher than the bank loan. What people do is that they'll go to the bank because the interest rate is lower, and the credit card might be a last resort, if you will. So a question to you, what are the risks of using credit cards when financing a business? What are some risks that you can think of? And you can raise your hand or come off mute. What are the risks of using credit cards?
I think, hello, Professor.
Hi, Ahmed.
I think one of the risks that the credit card reach the upper limit, yet the business is still not started bringing income or revenue.
Exactly. Yes, that is a big risk. Because your credit card might be capped, but you still need more. All right. Any other risks that you guys can think of? Danny is saying the risk of overspending that can lead into debt. Yes. So I'll speak for this country, and I know that we need to have better education about money in our schools at a younger age. So people understand that the credit card is not free money. A lot of people think it's free money because there's no impact on your paycheck or what have you, but you just spend the card because you have it, and everyone's trying to give you a credit card over here. I must get at least, this is no exaggeration, like 10 credit card offers every week in my mail. If you cannot pay on time, then the rate will be too high. Yes, that's that. Yeah. So it's like a last resort, but sometimes you have to do it. So it's the getting used to credit cards, Elena. Your credit score can be impacted. That's right. So it could be negative impact on your credit score, which is what lenders use. One of the things they use to lend you money to see how credit worthy you are. And I made a mistake, I think, when I was younger, where I wasn't using credit card. If I didn't have the cash for it, I wouldn't buy it. So I didn't really have credit established. I thought I was doing good because I wasn't using credit cards. And then when it was time to buy a home, it was like, you need to get some cards and pay them and so forth. So in this country, it's based on that. I will say this as an aside. The one thing I like about cryptocurrency and Bitcoin is that it transcends these financial boundaries that people might have where they don't have the proper credit, so they can't receive the money. The cryptocurrency is aimed at making us economically equal, if you will. So whether I have these assets or what they need to open a banking account or credit, I can get the cryptocurrency is above that, where I can get the transfer of funds without having those third parties involved. I like the economic aspects of cryptocurrency in making a lot more people economically viable. So the supply credit, if you're a supplier, is someone that's supplying your goods and services. So if you have office equipment or equipment for making your products and so forth. If you have, if you need to store stuff in refrigerators, molding, and so forth. So any type of physical asset, something that you can touch, you can have supply credit on. In this country, especially in my neighborhood, a lot of people like to do stuff, home improvement stuff. So we have a Home Depot, and everybody has a Home Depot card because you go there, buy a bunch of stuff, and even the people that work on your home or build homes, they go to Home Depot. Sammy's, you got that too. So
Yeah, I often go to Home Depot and I think I find it cheaper, not just for the home improvement stuff, but also for electronics. If we compare the price with other stores, it's like really cheaper than other stores.
yes, that is true. And that's, do you remember that term we talked about before? Economies of scale,
Correct.
meaning that they can buy 5 million electronics, whereas another store can only purchase 100 or 1,000 or what have you. So they can, the cost per unit is, the cost for them is lower, so they pass it on to you. So I know during COVID, everybody was in Home Depot, right? Everybody, you know, you looked around because you were in your house or your apartment, and you're like, I need to
True.
do something with this space that I'm in. So places like Home Depot and Walmart, they made out like a bandit. They made enough money. They had enough cash coming in to last them for another 10 years because that's the only place you could go to. I wonder what they're doing with all that money that they got. So grants, as I said, do
But-
not require. Sorry, go
But
ahead.
here in Canada, they trust credit card than cash.
Oh, why is that?
Yeah, they trust credit card, then you show your cash.
Why do you think that is?
Because in credit card, you all go through a screen before they will give you a credit card, right? But if you're holding a cash can turn it down than the credit card, because credit card hold all your information, all your records.
Oh, that's interesting. So if you have cash, they might think you stole it from somewhere.
Yeah. But if credit card, even if you are touring around the world, they ask credit card, not cash.
Yeah. Yeah, we're becoming increasingly cashless. And that's what the cryptocurrency is aimed at doing, because, long story, but the monetary system has failed, is failing, and we need to be cashless. My personal thoughts, especially for the economic levity it supplies for people that are not in capitalistic type of countries. So grants you don't have to pay back. Could it also be due to the interest they earn? Yeah, that makes sense because I guess she's asking you, Judlyn, and I'm answering for you. Wanting credit instead of cash. Winnie's asking, could it also be due to the interest that they earn, which is the credit card companies? I think so, because sometimes there's a relationship between the merchant and the credit card company and so forth. They might say the more credit you use, you might get a discounted rate because they're paying the bank a fee every time you use the card, so they may get reduced fees. So if you're a new business, you should explore both government and private foundation grants. Equity funding, as I said before, is investment in exchange for ownership, basically. Okay. So investors can be active, where they actively participate in the business. Passive, they call those silent partners, where they just invest and then they trust the founders and the other officers to run the business. They could be majority or minority. It could be other companies that are investing or other suppliers. So they do specify that you consult with an attorney, because you want to make sure everything is in black and white and everything is understood, and there are no blur lines, if you will, because where you start today is not where you'll end up. And there's a lot of court cases and issues over, the business gets bigger than we thought, or it failed. And then people misunderstand what it means to them as investors. So other firms can invest, venture capitalists, I mentioned, and business angels. These are people that want to invest in your business because they believe in you and they're going to provide the fund. So sometimes businesses will invest in you and they want a share of equity. So Microsoft, Intel, Cisco, so they can invest in new startup firms in technology because that's where they live. So they'll invest in that because you're in their same industry, if you will. So let's ask the questions. What are the pros and cons of getting investment from established larger firm? We know what the pros are, I think, but what do you think the cons are? When someone like a Microsoft invests in a new small business, what are some things that may not be good? Good things are, you can start up right away, you get all the funding you need, you got the resources, you have the expertise of a well-established large company. These are all good things. But what are some cons? You can share knowledge, that's a pro. Any cons, any drawbacks to this?
I think that the main disadvantage for that I will not feel the project is mine. It will be Microsoft's or Google's project by the time.
Exactly. The intellectual properties goes back to them, right? They can dictate the rules, yes, or by the company. Yeah, that's true. So you're playing by their rules, whereas if you and your partners, you make the rules. Now you got to play by their rules. So if you have greater ideas, they may or may not want to come on board with it. So, okay. So businesses, they look to buy because it's the least expensive means for new ideas because you've already thought out the idea. If they're in Microsoft, for example, you're depending on the people there to come up with new ideas. In a lot of cases, they're busy working on the ideas that were generated. And it's a heavy lift to come up with new ideas and get that started. As a new business, you've done the diligence, you've got your business plan, you've got the product, you've identified the market, product or service, you've identified the market, you've got your financial plan, you got your marketing plan, you got all that together, so they could just buy you because they read it and they're like, yeah, this could work. Let me just throw some money at it. So it's the least expensive way. And as I was saying, developing ideas in-house detracts the firm from its core business, right? We're focusing on our core business. We don't have time to develop new ideas. Okay. So the startups are purchased and brought into the core. So let's say you're a startup cryptocurrency business and you do exchange. So the bank, a lot of banks are slow adopters to it because they're trying to figure out how they can fit into this because it's kind of designed to move them out the way, but they can't afford that. So they got to figure out how to get a piece of the pie, if you will. So they might purchase a cryptocurrency business and streamline it into their operations to offer that particular service that they don't have the skill set for or the time to develop. So you can have supplier investors. So it's simpler, and they restrict the equity investment because they might have an exclusivity agreement. That means that you can only use their products. So, for example, if Home Depot decides to invest in you, you can only use their product. If Microsoft decides to invest in you, you can only use, their products. Microsoft Office, if you will. You can't use Google and so forth. So they dictate the terms of use. Okay. One of the things that entrepreneurship provides is flexibility and agility and creativity. And that can be lost when businesses invest in you. So think about that. one of the things we did earlier, we talked about how risk averse each of you were. That means, are you a person that embraces risk, or are you very conservative? So if you're someone that's not risk averse, that you don't mind taking a risk, that flexibility may not be there if businesses are investing in you and they are dictating the terms of use. So keep that in mind. Speaking of which, this is a side track. Whenever you do your individual assignment, you should have at least one reference, and the one reference is your textbook. So you should always have that as a reference, because a lot of the ideas and the direction you're getting from that textbook. Venture capital, or VC. These organizations, entities, they make significant investments in high growth new ventures. That means that these ventures strategically are going to make them a lot of money. So growth means revenue, means return on investment, right? So wealthy individuals might do so. Insurance companies have a lot of money. There's got to be a way to regulate them. I think about that all the time with all the money that I invest in my insurance company. And then when it's time to pay, they drag their feet to pay. And I had a situation where my roof was leaking. So the insurance company came and, patched it up, and then it was leaking other places. So the contractor that I asked to come out and look at it. He recommended a new roof, and the insurance company is trying not to pay for the roof. In the meantime, I've been paying insurance for over 5 years. So I'm like, it's like me going to the bank and putting my money in, and then when I ask for it back, they're giving me a hard time. So we had a row with them. I threatened to leave them because I have my auto and my house. And I was like, I'll go to someone else. And then they kind of relented, but it's just awful how they treat you when it's time for them to pay up. Anyway, small rent, other businesses, retirement funds. A lot of times people will dip into their retirement funds to personally invest, but then retirement funds, on the other hand, they can also invest in you, in your business. Business angels, not high net worth individuals who invest in businesses, not as a business, but as individuals. And the sharks on Shark Tank, each of them are high net worth, so they can invest in you as individuals, but usually they do it as a business because of the liability and the legal aspects of it. So when you start a business, try not to keep a lot of things that are personal in the business. So as I said earlier, you make a loan to the business, you're not giving it to the business. You have your own separate business account and so forth. Okay. And of course you want to have a good match. So people that have an interest in your business, but also in your sector, in your industry, that's who you want to invest in it, because they have that knowledge about it. Crowdfunding. How many of you have heard of Kickstarter? Raise your hand or give me a comment. Kickstarter. Anybody heard of Kickstarter? GoFundMe? Indiegogo? The one that I think is, I guess, GoFundMe. Do you have GoFundMe where you are? Where someone gets on the internet and say, I want to raise money for this cause or what have you, or this thing that I'm doing, and people invest. You guys don't have GoFundMe?
But I've heard of it.
You've heard of it? Okay.
Yeah.
It's big over here. Social media it's like, you know how social media is. So people that, if there's a disaster or something, someone will start a GoFundMe. Let's say somebody posts that the firm shut down and I've lost my job and I have a family and so forth. Someone might start a GoFundMe to do that if someone is treated wrongfully in different situations. their GoFundMe. People will say also, I've seen this on Facebook, like if it's their birthday, they'll say, instead of giving me a present, I'm going to raise funds for my charity. So they'll start a GoFundMe, and then they take that money, hopefully, and give it to the charity. So it's big over here. Okay, so they might receive equity in the company, a product or service, or a gift in return for their funding. Asset leasing, we talked about that, where you lease assets from places like Home Depot. All right. Factoring is when accounts receivable are sold to another company to receive immediate cash. And the way that works, and those that know accounting know about this, is that let's say I am a business and I have about, I'll use around $100,000 in accounts receivable. That means there's $100,000 that people owe me for my services that I haven't collected yet. What factoring is I can sell that $100,000 of debt, if you will, to a company at a discount. Let's say I sell it to them for $50,000. They give me $50,000, and then they now attempt to collect the debt. That's why when you owe monies, sometimes if you owe it for longer than you should, you'll see like a third party coming in to collect the debt because the initial company has sold the debt to them, and now they're trying to collect. So this is the way to receive immediate cash. And this is why when we looked at the financial statements last week and we looked at accounts receivable, we talked about current liabilities and long-term liabilities. And we said current liabilities were the ones that could be either cash or converted to cash in a short amount of time. So accounts receivables are usually 30 days, right? So if I collected on my accounts receivable within 30 days, I could have cash in that short amount of time. Or I can factor it, I can sell it and have cash as well. So that's why it's current liabilities. PE or private equity funding. Okay, so it's a series of funds that provide capital to you because the investors believe they can leverage their resources to improve it. So let's use Microsoft again. You know, they have it's a big engine. So they believe that they can use their resources to get this new software company up and running. Okay. And then what they do is the end goal is to professionalize the business to make it attractive to sell it to a larger organization. So they're kind of grooming the entrepreneurial business so they can sell it off. So that's what private equity funds do. So how do you know how much initial funding you need? Last week, we looked at the cash flow, and we looked at, I think we said 6 months. And what do you need initially for the business to start up? So one recommendation is to look at the cash balances, which we saw in the cash flow, and multiply it by 150%. And I'll show you an example in a minute. So that means that whatever you think it is, you need to multiply by 150. Okay. So let's take a look at this. So let's say the value of the firm prior to beginning operations was $100,000. The lowest point in projected cash flow, that's your ending cash balance that we saw, right? The lowest one that you see, you want to multiply it by 150%. So that'll sustain you throughout. So that is $30,000, 150% of that. So that's required investment. And then the investors is investing that $10,000. And then we need outside investors of $20,000. So the potential percentage of the business by investors is 20%. Okay, 20% of $100,000 is $20,000. So again, the projection is that your lowest point in your cash flow, you look at each period of your cash flow, look at the ending balance, and then whatever that is, multiply by 150%. And this is what you would ask for in your business plan, what you're asking for the business. So let's talk about accounting. You want to determine, first of all, you can use software for accounting. You don't necessarily need an accountant. Are you guys familiar with any of the accounting software out there that a small business or startup business can use for their business? Are you aware of any names of those software?
I don't know if it's available in the US, or I came across this Sage 50 or Peachtree.
Yes,
I'm not
Peachtree
sure.
Accounting.
I'm not sure. Yes, yes.
Yeah, we have that
I've
here.
heard of it. I haven't used it. I haven't used it, but I've heard of it.
Yes, we have it here.
Yeah.
We got SAP, 1C, Dynamics 365. All right. So you guys have you've heard of it. So you don't have to necessarily go out and hire an accountant per se. You can actually, use the software. So I'll add a couple more to that. We have QuickBooks over here. We have Quicken. We have Peachtree Accounting. Even at a basic level, Microsoft Excel can offer you, you can build an accounting system in there because you have formulas to calculate and so forth and so on. So initially, there doesn't have to be a heavy investment in accounting software or even in an accountant. So these are things that you should be prepared to generate with your new business. Chart of accounts, which is just a listing of all your accounts. We'll see that in a minute. A petty cash register, a check register, expense accounts, inventory accounts, accounts payable, money you owe, and payroll, also money you owe. So let's look at a basic chart of accounts for a company that manufactures electronics. So they have a numbering system. I notice how they skip numbers, but then when it gets specific, they have them, incremental here. So they have the cost of goods sold for the wooden tubes. What's involved in creating these things? Okay. So that they have the accounts. You have both products and services. This looks like a product. This is a service. Products. Service. Products, and so forth. So that there's a numerical system that tracks your products and services. So you can assign value to them. You can assign values of inventory. How much do we have in inventory? Or you can say assign a cash value. This basic tube costs $50. I sold 50 of them, so $250, $2,500 is what this account is bringing in. So you want to have a basic chart of accounts. Now we have a lot more services here. Internet, leasing, autos, insurance, advertising, payroll, benefits. So these are good inputs into your business plan for making sure you cover all of your expenses. Okay. So petty cash is like cash available on hand in case you have emergencies, if you will. So usually it's in a lockbox. Could be in somebody's drawer. It's got a key. And let's say you need to run out to the store and get something for the office or what have you. You can withdraw from that cash And then you always want to, at the end of the week or the end of the month, replenish it. Okay. I'll give an example of petty cash, if you will. Certain businesses, well-established ones for the most part, they empower their managers. So every month, that manager will have, let's say, $5,000 of petty cash. They may call it something different, but it's the same concept. That means that as a manager, you can make decisions with that money without having to check in with someone else. So for example, let's say the customer comes in and they don't like their meal, if you will. Let's say it's a restaurant. You don't like your meal or something wrong with the meal. The manager can say, listen, we'll comp the meal. That means that the meal for you is free. So if the meal is $20, then that $20 comes out of the petty cash, because you still want to account for the cost of, producing the meal. So it's a way to have money on hand to make decisions quickly. And again, you're replenishing it at the end of the month or the end of the week. Okay. And of course, you want to keep track. You want to have a register of what went out, what it went out for, and so forth. And the check register. You remember back in the day, you wrote in your checkbook what you spent and what the balance is, and you had to keep up with that. Anybody remember back in the days? Are you still doing it? So the online banking does that for you. It'll tell you the check that you wrote, how much you wrote it for, and what the impact is on your balance. Okay. So make sure that you balance your company account on a monthly basis. So at the end of each month, I should know what my check register is, what my petty cash is, and so forth. Let's look at some other things. Expense accounts. Again, you want to look at a listing of expenses. Some companies will give you a credit card, a business card, to track your business expenses, and it makes it easy for them because they could just get the credit card statement from the bank that shows what you spent it on. Okay. So you want to record your checks, your petty cash. Your credit card interest is an interest expense, which is a business expense. And then you can break payments up by card type. Maybe some cards are for a supplier card versus a card you can use universally. And then review IRS requirements for travel expenses. I will point you to this as well. Look at what, in terms of your expenses in your cash flow, look at what the IRS, Internal Revenue Service, or what you're in your country, what that looks like. So the IRS is the national service that stipulates what you can expense for business. So if you're in business, you can expense meals, entertainment. Depending on the type of business, you can expense your wardrobe or expense cleaning, alterations, of course, travel, and so forth. If you use your cell phone for business, you can expense that as well. So be mindful of what those expenses look like, and be sure to include them in your cash flow document. Inventory. If you are selling physical goods, you want to track the items, the quantity, the item number. Each has a number, so you can easily, quickly get to them, and the unit cost for them, and then the total cost. All right. So you should take your inventory at different times during the year and at year end, so that you have starting inventory. You have a number for starting inventory for whatever your period is, every month or every year. Okay. And then you should have a good match between what you started with, what you sold, and what you ended with. If you had 100, you sold 50, the ending inventory should be 50, and the starting inventory for the next period should be 50. The shrinkage is the difference between what you sold what is sold and what's brought into the business. Okay. Accounts payable. This is money that you owe. So they could be invoices, including credit cards. You want to record the date they were paid, the amount they were paid, and the check number, or what the bank, if it's a banking transfer, what that tracking number is. And in a lot of cases, I mentioned QuickBooks and Quicken. You can actually download your bank statements into QuickBooks and Quicken, so you don't have to retype anything in. You can just download it, and it knows to separate assets into liabilities, expenses, and so forth. Payroll. You want to have a record for every employee. So this is what you should have for each employee. The date they were paid, the check number, and the number of hours worked, their base pay versus their overtime pay rate, gross pay, and taxes, and any benefit that you deducted, and their net pay. Very important, because this is definitely government regulated. So make sure you keep accurate records of each employee, including yourself. The P&L we talked about last week, the profit and loss statement, it summarizes your revenues. So income coming in, I should say coming in. So income coming in is the income that the business generated. That's the difference between this and cash flow. The income and the cash flow, when you start up, is investment income. And then after a while, the business starts to make money, and now you have a P&L statement. So the P&L is what the business is generating. So the revenues, the costs, and the expenses incurred for a month or a quarter or a year. Okay. You should prepare the statement monthly. So this is an example of a P&L. So let's say this looks like different periods, if you will. So you got your total income in dollars. These are the account numbers. And you have your expenses, income expenses, and then you have your profit. So this is pre-tax profit, because this is what the government will tax you off. Not the, oops. And that's what the EBITDA, or income before income taxes, comes in. It's not of this amount, it's of your profit. You're taxed off your profit, because the government knows that you got to pay expenses. And it would be unfair to tax you off your gross profit. Okay. Sample P&L. Data flow is really, so this is not about the money, but the data that you need for your business. Okay. So you want to make sure you have the data and the information to make the correct decisions. So for example, if you are, I guess, a farmer, I'll use that. I'm just pulling that out of the top of my head. You want to start a farming business. Farming is huge here and across the world. You might need certain data, such as weather data, data about the soil, data about which crops to plant and which times of the year and so forth. So even though you don't have the complex information that your established firms do, you should have the same basic philosophy. One of the things that I've noticed with small businesses that they fail because they fail to adopt the principles that their larger counterparts have. So one of the things that you can adopt easily and readily without a lot of, heavy lifting is great customer service. You don't have to go far and wide for that. That could be a principle that you can adopt. You can do a favorable return policy, things like that, because the focus, again, the customers are buying your products and services. You want to make it comfortable for them. Professionalism, right? is a difference between small businesses and their professionalism, where when you go to a larger business and you see the professionalism there. So this is something you can adopt as a small business, is to have professional, especially client-facing people, that they're very professional and courteous and polite to the customers and to the employees. So you want to, so this information, this data is going to help you to manage and run your business better. And that is the chapter on accounting and finances. Any questions or comments? Anybody have any questions or comments? All right, no questions or comments. So let's take our break before we go into our team. Let me see. I'm gonna do a brief word cloud. Because knowledge is provisional, I'm gonna see what a good break-in time look like for you guys today. So let's see what the optimal break time is for today. I'm launching a poll. So just put in minutes what the optimal break time is for your preferred break today. So in minutes, what do you prefer? And we'll take the majority. So far we got 3 responses. We're expecting 16. Okay. We got 6. We're getting there. We need 10 more. 10 more responses. We've got 8. We need 8 more. We've got 10. We need 6 more. We got 12. We need 4 more. 13. 3 more. But there is a clear winner, so need 3 more participants. 14. 2 more. Want to make sure this is a democracy. 15. 1 more. 1 more response. All right. So the winner is 20 minutes. So let us come back at 11:32. I'll put that in the chat. And we'll go to our different rooms. 11:32. Okay. All right. Welcome back, everyone, from our break. Are there any questions before we adjourn to our team rooms? Any questions from anyone? Going once? Okay, let me open the rooms then. I do have access this week. All right. I'm going to open all the rooms. Then I'll be by to pay you a visit after I open them. And then we'll resume here in an hour or so.
Gifts and samples, maybe at the beginning. We can give some gifts according to the themes of the tables and something like that. So we can give some samples when people are going, like a giveaway.
I like that.
Sure.
We return it back.
All righty. Welcome back, everyone. You guys had a good session with your teams today?
Yes, for sure. Thank you, Professor.
Excellent. It sounded like it when I
We have chatty chatty.
what was that?
Everybody back. The professor enter our own room. If there's any question, so you got a chance. See
I
more
don't think he's
advantage
talking to
in
me,
your
so I'm
online
going to mute him.
Mama, if you could see my small phone.
How can I do that? Judlyn, you had a question or comment?
Yeah, we are good in our room. We are chatty chatty.
Yes. See that. Excellent. I'm glad. I'm very proud of you guys and the work you're doing, that you're really becoming engaged and you're asking the right questions. And some of you have these tools that you're using. You're using the whiteboard and you're using OneNote, and it's very impressive. So keep up the good work. Very proud of you. Very proud of what you're doing. I did post the individual exercise in the chat, so I'm going to go over it briefly. So given the needs of your business, and today you talked about the chart of accounts and how you're going to fund your business. So given the needs of your business, look at 2 accounting packages and choose one. You mentioned some today. I mentioned a couple. So each country might have a different accounting package, or for different parts of the world might have a standard, but accounting is a universal language. It's debits and credits, plus and minuses. So numbers don't lie, people do. So choose one that you think will be suitable for your business, and remember that a lot of this is theoretical, because I don't want you to think that I can't really afford this. Think about it in terms of you have the monies to buy the right package you need to fulfill your business. A lot of times, different industries will settle on a type of a accounting package just based on the industry, because it's more closely aligned. I'm trying to think of which package. I can't think of the package now, but if you're like a construction company, for instance, there might be a standard that they use, because they cater to that industry. So you're gonna look at least 2, choose one. Why did you choose that one and not the others? And then you're gonna talk about how robust the package is. Robust, that means how applicable is it to all of your business needs? And the other thing you want to consider is scalability. So you might, for example, I might use QuickBooks when I start, because it's a small business, small number of accounts, it's not very complicated. But as we grow, we might want something that's able to scale. So think about that as well. And then, yeah, that's pretty much it. So that's the individual exercises for the week. And again, I'm going to be giving you credit for completing it. Not necessarily going to look at I will comment on, some things in it, but you've completed it, you've done the work, and that's what you'll get credit for going forward. Any questions before we wrap up the day? Anybody have any questions? Questions or comments? All right, well, have a great week. Thank you for all the great work that you're doing. It doesn't go unnoticed. I know the people that are really trying and striving and making sure that they're remaining engaged. So good job. So what I'm asking for you to follow up with me is your interest in the internship that I talked about earlier, and then your interest in that trifactor class I mentioned: transformational leadership, organizational change management, project management, how they all work together to deliver project success for the business. And I'm thinking about offering it as a course and as a certification. So let me know what your interest is in those areas. And I will look to see if I can get a copy of the webinar on Wednesday. And at the very least, I can actually look at it on my screen and share it with you. Okay.
Sure, Professor, but I can attend. I'm a PMI member, so I'll definitely try my level best to attend.
Oh, I'd be glad. It'd be great to see you there. It's 2 p.m. EST.
Okay, sure.
And you probably see, is it being advertised? Are you seeing it in there?
Yes, I think I saw I didn't log into PMI for a long, but I'll definitely check again if it's there in the main news feed. But yes, I'm
Yes.
definitely trying on that.
Yes. And it also be on projectmanagement.com. That's the platform for all the webinars and stuff. So I expect you to ask questions when you're in there, Samia.
Sure, definitely. I'll definitely.
All right, great. I'll be glad to have you in there. I think Amir's going to attend as well, and some other people from the staff. So looking forward to it.
Sure. Thank you.
Thanks, everyone. Have a great
Thank you,
week.
Professor.
Bye,
welcome.
Thank you.
everybody.
Thank you, Professor. Bye.
Thank
All right.
you.
Thank you.
Thanks,
Bye.
bye.
Bye.